Good morning, guys. How are we doing today? Hopefully, you guys are having a good day so far. I'm going to be breaking down the FUBO earnings call. It should be starting here any second. I'm in the pre-call right now. Let me just get some things set up and I'll go through my first initial thoughts on what's going on. I'll be giving you guys a full breakdown on everything, as you guys know. And we'll go from there pretty much. Let me get this here. Alright. So FUBO earnings call. The stock hasn't moved too much since the news has dropped. I think it is going to continue to increase throughout the day. Evidently, I think the main things that you're looking at, based on what I've seen, looking at this earnings report, is that you got to focus on the total revenue of 377.2 million, which is down 2% year over year. But comparatively, the market revenue for the rest of the world is continuing to decrease, but we've seen North American paid subscribers increase, which I think is going to show that these they're making improvements in things like where was it? Earnings per share. I can't even find it, but the adjusted earnings per share of 2 cents compared to an adjusted earnings per share loss of 8 cents in Q3 is something major I want to point out. And these improvements in adjusted earnings per share and adjusted EBITDA signal that FUBO is moving towards profitability despite reporting a net loss for the quarter, and it's kind of why the stock's teetering as I'm seeing it right now. It's at that $385 mark, but I think by the end of the day, I think it should be at $4. I think we will see it probably close to when it opens, depending on how well this call goes. But I think also another thing that matters with this, that what we're seeing here is the subscriber growth in North America through although obviously it's modest, it's not very big, the earnings growth, but it's something to keep an eye on, and I think it's going to continue to grow in the future. And it's I made a video on the best penny stocks, in my opinion, and FUBO was one of them, and I think this is kind of proven why, because I think this has a lot of potential to grow in the future, and I think there's a lot of room to grow here. As we could see, with their revenue still down on many aspects, there is a lot of potential to rebound, especially in the rest of the world, the market. Let me just do something real quick. And so yeah, I was saying that the main things are the subscriber growth is still positive in North America, because the company is fighting a lot of competition, and there is cost pressure basically in this type of market, especially with the sports. It's such a hard niche to really capture, and there's so much different licensing issues. There's a lot of different issues, especially locally as well as regionally. So I think the drop in ROW revenue and the net negative free cash flows are areas of concerns, and suggest that they're doing heavy investment, or that there is cost pressure. But I still think that the liquidity remains very decent for this company, and they have very decent cash on hand, which gives the company a lot of runway, and this allows them to execute their strategy as time goes on in the future. I think they're set up in a pretty good position, and I think as I've looked at this earnings, I think they're continuing to grow in very many different aspects that I think hopefully they answer some questions on how they plan to combat cost pressure and stuff like that. But I think the main things to look at is the free cash flow being negatives means that the company is consuming a lot of cash, but it is important in streaming and stuff. So it's going to be important to see how they explain the amount of spending they've done, what they plan on the future. But I still think that the stock should be over $4 a share by the end of the day, pretty much. I think this was a pretty good earnings report, and it's kind of stabilized the company from what it was. I know it was dropping really hard earlier in the year, but this is a good stabilization, in my opinion. And I think this, if they could follow through with quarters like this, then the stock will continue to rebound and go much higher in the future. And as we can see here, the earnings call is about to start. In their press release, I think the main thing is that the revenue of 377.2 million. Obviously, it's slightly down year over year, but it's still ahead of all the estimates I saw out there, and it shows that FuboTV can still maintain top line scaling, even though there's the price changes and cost controls that they're having in place. They're also holding very steady as the company is tightening margins and focuses on profitability instead of pure growth. By them having 1.63 million, I think, paid North American subscribers, this is a new record for the company, and it's a 1% increase year over year, proving that the platform is holding their customers despite there being so much competition. I know a lot of people moving to YouTube TV, there's Hulu Live, there's Sling. I mean, there's so much competition, and they're still holding very well. If anything, they're also growing. And as we can see, the stock is now moving up. Let's go. I agree, brother. I think this is one of the best earnings not calls yet. One of the best reports I've read in recent time, and I think it's a real turning point for the company. I was saying earlier, I think the stock should be at $4 by the time the market opens, realistically. I hope the call goes well. But my main thoughts are that the subscribers and the market share are still looking very strong. The profitability is turning. We've seen the net loss improving to a positive 18.9 million, which is a huge swing from what it was last year. I think it was in the 50 millions last year. So it's like a 70% reduction in losses. They had a positive adjusted EBITDA, which is a signal that operations are becoming self-funding. They also have a lot of cash, as we've seen. Can I find the cash? Yep, ended the quarter with 280.3 million in cash and cash equivalents. This is absolutely massive for a company of this size, and I think it will allow them plenty of liquidity, no need to dilute, and they're able to invest in technology, more sports rights, while continuing to narrow the losses that we've seen in prior quarters. Also, we've seen the cost discipline is kind of starting to pay off for FuboTV. The operating expenses declined materially. Here we see the operating expenses have declined, and this is kind of why it pulled back on content overspending, on marketing inefficiencies. The company is kind of now focusing on getting as much profit per user rather than total subs, which is a great business model, and it's a sustainable business model rather than what it used to be, where they were kind of trying to get as many subscribers as possible, which just isn't a good way to focus on, because there's so much bigger names in the market. There's Hulu, as I was saying, Netflix, Disney Plus, and as long as they can have their market and they can have loyal customers, I think that's the best thing, and then growth will come with that. If they have these licenses and everything, everything will kind of fall into place. As well as I saw they reiterated their AI-driven ad targeting and integrated sports betting. I think that's going to be one of the biggest levers for the growth next year, because everyone I know, most people won't even watch sports unless they're betting on the game. So I think this is going to be a huge move for the company, and integrating this into their package is going to absolutely change the game. No one's really done this yet, and I don't know why. It seems like a no-brainer. Everyone's sports betting now, and the early tests of it and the premium add-on tiers are already lifting the engagement metrics, which is something we like to see. Not only this, but the management emphasized that the path to sustained profitability is well underway. So this is, I think, there's a potential for double-digit adjusted margins long term, and I think the stock could really recover very quickly once it starts to recover. Not only this, we've seen the revenue is stabilizing while losses are starting to lower, which is a classic inflection setup. The company is now profitable on an adjusted basis, and rather than what it used to be, and it has a strong cash position. So any subscriber acceleration.
Thank you for standing by, and welcome to the FuboTV third quarter 2025 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you'd like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press star 1. Thank you. I'd now like to turn the call over to Amit Pate, SVP, FP&A, Corporate Development, and Investor Relations. You may begin.
Thank you for joining us to discuss Fubo's third quarter 2025 results. With me today is David Gandler, co-founder and CEO of FuboTV, and John Janidis, CFO of FuboTV. Full details of our results and additional management commentary are available in our earnings release and letter to shareholders, which can be found on the Investor Relations section of our website at ir.fubo.tv. Before we begin, let me quickly review the format of today's call. David will start with some brief remarks on the quarter and our business, and John will cover the financials. Then we will turn the call over to the analysts for Q&A. I would like to remind everyone that the following discussion may contain forward-looking statements within the meaning of the federal securities laws, including but not limited to statements regarding our financial condition, anticipated financial performance, expected synergies and other benefits from our business combination, business strategy and plans, including our products and subscription packages, market, industry, and consumer trends, and expectations regarding growth and profitability. These forward-looking statements are subject to certain risks, uncertainties, and assumptions. Actual results could differ materially from our current expectations, and we may not provide updates unless legally required. Potential factors that could cause actual results to differ materially from forward-looking statements are discussed in the earnings release we issued today, our letter to shareholders, and in our SEC filings, all of which are available on our website at ir.fubo.tv. Except as otherwise noted, the results we are presenting today are on a continuing operations basis, excluding the historical results of our former gaming segment, which are accounted for as discontinued operations. Please note also, these results reflect FuboTV's standalone operations prior to the recent completion of our business combination with the Walt Disney Company's Hulu plus Live TV. During the call, we may also refer to certain non-GAAP financial measures. Reconciliations of these non-GAAP measures to the most directly comparable GAAP measures are available in our Q3 2025 letter to shareholders, which is available on our website at ir.fubo.tv. With that, I will turn the call over to David.
Thank you, Amit, and good morning, everyone. This quarterly earnings call is unlike any other in our history, coming just days after completing our transformative combination with the Hulu plus Live TV business, setting a new stage for what's ahead. The combination of FuboTV and Hulu plus Live TV forms one of the largest live TV streaming services in America. Our combined nearly 6 million subscribers in North America make FuboTV the 6th largest pay TV company according to recent UBS estimates. It's a defining moment for our team and our shareholders, and the culmination of years of innovation and execution. Together with our strong standalone results, this combination underscores the enormous potential ahead, a consumer-first platform built on choice, value, and profitable scale. Now, looking at our third quarter standalone results, FuboTV ended the quarter with 1,630,000 paid subscribers in North America, our strongest third quarter performance to date, and $369 million in total revenue, alongside solid contributions from our international operations. We're also proud to report that we achieved meaningful improvements in both net loss and adjusted EBITDA, with the third quarter representing our second consecutive quarter of positive adjusted EBITDA. Beneath those strong headline numbers, the health of our underlying metrics continues to improve. Trial starts increased, and conversions from trial to paid meaningfully improved year over year, while churn declined nearly 50% versus last year. At the same time, we reduced marketing spend during a highly competitive sports quarter, reinforcing our path toward profitability and stronger margin expansion. These trends reflect growing consumer demand, higher engagement, and the continued scalability of our model. Our mission remains clear: deliver must-have programming through a flexible, value-forward experience. FuboTV continues to make watching live content easier and more valuable. The FuboTV Channel Store, similar in concept to Amazon Prime Video channels, offers third-party premium services like RSNs, DAZN 1, Hallmark Movies Now, and Paramount Plus with Showtime into one sports-first interface, removing friction and simplifying viewing. Our FuboTV Sports Skinny service added lower-priced, high-value access to top sports content, including the majority of ESPN Unlimited content, and is driving record trial conversions. Together with the expansion of pay-per-view, which delivered double-digit sales growth in October compared to the prior month, these initiatives demonstrate FuboTV's ability to innovate, scale engagement, and strengthen our live platform. We have built market-defining features, multi-view, game highlights, game alert push notifications, and catch up to live that increase engagement and make watching sports easier and more entertaining. These are the types of personalized capabilities we will continue to scale across our growing membership base. FuboTV's recent results gives us much to be confident about, and we envision unprecedented opportunities at the combined company. We're expanding choice, not forcing one bundle. The combined company offers consumers a broad set of sports and entertainment-focused programming offerings from FuboTV and Hulu plus Live TV, respectively. Together, we give families flexible ways to right-size their spend while broadening access to the best content. In the near term, we'll focus on programming efficiencies, ad tech uplift, and marketing at scale, including through ESPN's ecosystem, as well as deeper personalization. These are four major drivers to grow our subscriber base and achieve our profitability goals. In closing, we could not be more excited about FuboTV's future. We believe our third quarter standalone performance, coupled with the opportunities unlocked by our business combination with Disney's Hulu plus Live TV, solidly position FuboTV for future success. We want to thank our retail and institutional shareholders for your unwavering support and to our customers for your loyalty. We remain committed to building a consumer-first streaming service that delivers more live action, less friction, and superior value. I will now turn the call over to John Janita, CFO, to discuss our financial results in greater detail. John.
Thank you, David, and good morning, everyone. Our third quarter results reflect continued progress in both execution and profitability, capped by a historic milestone, the completion of our business combination with Hulu plus Live TV. We believe this transaction is a huge win for our company, shareholders, and the market, and we could not be more excited about the opportunities ahead. Taking a look at the results for the quarter, in North America, we delivered total revenue of $368.6 million, down 2.3% year over year, and reached 1.63 million paid subscribers, a 1.1% increase year over year, and their highest ever third quarter subscriber count. In the rest of the world, revenue was $8.6 million, and we ended the quarter with 342,000 paid subscribers. In North America, advertising revenue totaled $25 million, down 7% year over year, primarily reflecting the absence of certain ad-insertable content and one-time benefits in the prior year period. That said, demand indicators remain constructive, including upfront commitments for the 2025-2026 cycle, up over 36% versus last year, with nearly a third of advertisers new to FuboTV. Non-video formats such as pause ads and branded activations grew over 150% year over year. These personalized and dynamic ad experiences are driving greater engagement and reinforce the stickiness of CTV formats beyond standard video ads. Net loss was $18.9 million, or 6 cents per share, compared to a loss of $54.7 million, or 17 cents per share in the prior year period. Adjusted EPS improved to 2 cents compared to a loss of 8 cents in the prior year period. Adjusted EBITDA was positive $6.9 million, representing a year-over-year improvement of more than $34 million. This marks our second consecutive quarter of positive adjusted EBITDA, underscoring the strength of our cost discipline and the scalability of our model. I would also like to point out our continued improvement in expense efficiency, with total operating expenses now approaching parity with revenue, our best ever third quarter performance. This reflects the benefits of disciplined content spending, optimization of marketing investments, and ongoing focus on scalable growth. From a cash flow perspective, net cash used in operating activities was $6.5 million, or a $9 million increase compared to Q3 2024, while free cash flow was negative $9.4 million, a decrease of $8.3 million compared to the prior year. Free cash flow improved sequentially versus Q2, but was lower year over year, driven primarily by working capital timing. We ended the quarter with a solid liquidity position and balance sheet flexibility, including over $280 million in cash. In summary, Q3 was another quarter of steady financial progress and operational execution. We've demonstrated consistent improvement in profitability metrics, disciplined cost management, and continued engagement growth. With the Hulu plus Live TV combination now complete, we enter the next phase of our journey as a stronger, scaled player in the pay TV ecosystem, positioned to deliver sustainable profitability and long-term shareholder value. With that, I'll turn the call back to the operator for Q&A. Operator?
Thank you. We will now begin the question and answer session. If you would like to ask a question, please press star one on your telephone keypad. We ask that you please limit yourself to one question and one follow-up. Your first question today comes from the line of David Joyce from Seaport Research Partners. Your line is open.
Thank you. First of all, congratulations on completing the combination early. I was wondering about the advertising side of the business. If you could delve in a little bit more into what the content that was removed to make the comparisons a little challenging. But going forward, you will have the new advertising relationship with Disney, where they're taking care of the ad sales, but you get the revenue net of the ad sales commission. So is that across all of the subscriber base that they have the ownership of on Hulu Live? Thanks.
Hey, David, this is John. Maybe I'll take the first part of that, and David will take the second. On the content portion of the question, just as a reminder, we dropped Univision effectively at the end of last year, so that had an impact as number one. Number two, we also had some residual maximum effort channel revenue in there as well. And then third, unrelated, but there was also a political comp in there. And so if I were to kind of normalize for the three of those, I would say ad revenue would have been up modestly year over year for the quarter.
Yeah. And David, just to add to that, I think, when you look at the results for the quarter, I think ads has been the only minor blemish on an otherwise outstanding quarter. But that's a high-class problem given our combination with Hulu Live. As we've stated, Disney will be taking over advertising sales, and we expect that as we collaborate and integrate our inventory into Disney's ecosystem and ad server, we should see pretty strong results relative to where we are today. So we're very excited about that.
Your next question comes from a line of Patrick Shaw from Barrington Research. Your line is open.
Hi, thank you, and congrats on completing the transaction. I was wondering if you could, now that the transaction's been completed, could you maybe discuss some of the differentiating factors on the basically the full services and why maintain both offerings in addition to the sports-focused package?
Yeah, this is David. I'll take that. So one is, I think this is one of the few cases of when companies combine that do not have any overlapping customers. Hulu Live does not overlap with FuboTV. They're similar, but quite different. We've been very focused on driving, our sports identity, branding, and delivering capabilities for sports fans that I mentioned in my opening comments. Hulu has been more of a general entertainment bundle that has sports, and it's very important for us to continue to provide consumers with optionality and flexibility. And there's programming that we don't have on Fubo today, obviously top quality networks that are available at Hulu. So this only adds to the spectrum of offers that we provide consumers at different price points along the demand curve. So this is really part of our super aggregation strategy that we talked about, as far back as 18 or 20 months ago.
Okay. On the cost side, you had a pretty significant reduction in sales and marketing costs year over year. Is that partly a function just of kind of maintaining your target subscriber acquisition cost of about one times ARPU range, and just with the sports product being kind of lower cost and just being mathematical from that? Or is there any specific things to call out in terms of subscriber retention or additions that you're able to find efficiencies on?
Yeah, very good question. This is David. I'll take that. Look, I think that, when you look at what we've been able to achieve this quarter, we had a 68% increase in net adds on a year-over-year basis while decreasing our marketing spend or sales and marketing line as a percentage of revenue by 21%. In part, that's due to the fact that we have many more offers in the market, everything from the Fubo Channel Store to the Skinny Bundle, to our Pro and Elite offers. And we've also begun to leverage AI, both on channel optimizations and, creative testing. So all of these things have worked together, and, we've stated many times that our goal is to be measured and disciplined, and we didn't see a reason to push any further given how expensive third quarter marketing is. And the last thing I'll say is that you're right. We have stated since 2020 that our goal is to maintain that SAC to ARPU of 1 to 1.5 times. I'm very happy to say that this year we've been well below the low end of that range. So we think we can become even more efficient, particularly as the structural shift in consumption, continues to move in our direction.
Your next question comes from the line of Alicia Reese from Wedbush. Your line is open.
All right, thanks. Thanks for taking my questions. First, I was hoping we could dig a little deeper on the Skinny Bundle. The 20% sequential subscriber growth suggests that you've seen a nice uptake so far, and the subscription ARPU suggests that the impact was pretty limited. Can you speak to, at least qualitatively, to the dynamics of the Skinny Bundle? Like, are these new subscribers? And for those that converted from existing subscription tiers, did they primarily come from the base tier, mid-tier, or premium tier?
Yes, sure. Hey, Alicia, this is John. I'll maybe start with that one. Look, I'd say it's early days, clearly, but I'll share a couple of data points for you. Number one is, look, we feel good about the $55.99 price point. At launch, the reach was about 1/3 of the country. Now it's north of 80%, heading to full distribution by the end of the year. A couple of months in, we see virtually no cannibalization, and we think it's really expanding our addressable market. And I would just add, a couple of metrics in the short term on retention and churn. It's early, but I'd say performing as expected, meaning better retention and lower churn relative to Pro and Elite.
And
Yeah, I would just
if I could follow. Oh, sorry.
Yeah,
go ahead.
Sorry, go ahead. No, I was just going to add very quickly that we're seeing this type of success not only in Skinny Bundle, but this was a strong quarter across the board for all of our offers. But of course, the Skinny Bundle has really delivered on trial starts, conversion to paid, net churn, at least in the early days of the package.
Okay, yeah, that makes sense. And can you just discuss briefly how the Q3 marketing budget was allocated between promoting the heavy sports calendar and the Skinny Bundle?
Yeah, look, I think we have a world-class marketing team and retention team, and I think we're very focused on ensuring that we scale profitably, and we obviously manage almost in real time the different packages to ensure that we're continuing to drive both top and bottom line.
Your next question comes from a line of Laura Martin from Needham & Company. Your line is open.
Hey, David. Now that you guys have closed the Hulu Plus Live deal, I'm wondering, they have 4 million subs. You guys have 1.5 million, round numbers, 1.6 million. Aren't they sort of the dog and you guys the tail? I know you're running it, but isn't the strategy sort of get eclipsed by theirs because they have so many more subs? And can you talk about just over the next 6 months, 9 months, how much is really you driving this company compared to FuboTV, Hulu, which is so much larger?
Yeah, Laura, thank you. This is David. Good to hear your voice. Look, you and I have been going at this now for, 5 years. I remember my first meeting with you over COVID, I told you one day we would be contribution margin positive. And then 2 years later, I told you we would be gross margin positive. And I can tell you that, I don't know about dogs and tails, but I can tell you that this is no longer a fairy tale. FuboTV will continue to drive significant growth. I can walk you through kind of areas in which that we believe that could be the case. One is you're seeing very strong net adds in a quarter that is typically very competitive. And we've been able to add more products to market. We've had record net churn numbers, all positive. We removed Univision from the platform sometime in December. And just to kind of give you a little peek into Q4, we're seeing record Latino numbers sans Univision, which is very positive. So I think actually FuboTV is going to be a very important growth engine for the company. There are a few areas in which where I think we'll really sort of hope to take advantage of this new collaboration. One, I think, is quite obvious. ESPN's ecosystem of ESPN Radio, ESPN.com, Flagship, and other spokes that they have within that ESPN flywheel probably averages somewhere in the sort of 100 million monthly active users. This is a funnel that we have never leveraged before. So we think that there's probably significant untapped value for us to grow our sub base, again, profitably, which means it could have a very positive impact on our sales and marketing line. The second thing is an area where I think you've had a lot of questions on and maybe a little bit of frustration around advertising. I think that there's significant upside in our relationship with Disney. Once part of the Disney ecosystem, all of our football, basketball, baseball, soccer, all of that inventory will likely move over, hopefully sooner rather than later, but we're targeting sometime in the first quarter given some of the technical hurdles that we need to go through. We're transitioning our ad sales team over to Disney, so there's probably some pretty significant upside from where we are today relative to where we could be if you think about Disney Sports CPMs and their ability to just use their scale, to fill our avails. The third area, which I'm really very excited about, which is an area that we've significantly underperformed the market, and probably a reason why the stock has underperformed, is programming efficiencies. We have not been able to achieve what I would believe to be fair deals, and that's because everything is related to size-based MFNs. But as the sixth largest pay TV player, it doesn't really tell you much. I look at this as the second largest virtual MVPD player in the market, which means that those structural shifts, both from a consumption perspective, as well as a monetization perspective, are in our favor. And we think that we'll be able to grow that. And last but not least, an area that we really don't discuss a lot, which is the international piece. We've been really focused on our unified platform. As I like to say, timing is everything. That platform is almost ready to go. We'll be onboarding Molotov or migrating it onto the FuboTV platform. And Disney has 100 plus international subscribers in its D+ service. And I think that similar to the way Hulu Live has been embedded into Hulu and potentially into Disney+, we think that there's probably an opportunity for us to drive significant growth. Our ambitions have not changed. We want to be the world's largest live TV provider. and we're using streaming, to make a smarter, cheaper, and more profitable, TV product.
Super helpful. You guys have always had a world-class tech stack. Do you find you're able to use any of the new generative AI capabilities to personalize the recommendation line or personalize what you're showing to different consumers? Are you using any of those capabilities to drive better product updates?
Yeah, of course. That's a great question. Look, I think what's interesting that people have not noticed or investors have not noticed about FuboTV is that we have removed a significant number of channels from the platform, yet ad inventory, or ad avails, I should say, has grown year over year by about 30%. So what we're really focused on is recommending the appropriate programming for the appropriate user at the appropriate time. And so we've been using our AI capabilities to develop, highlights for all of our sports moments, and really put those in front of the consumers that find that content most impactful. One thing I will say as it relates to all of this is that, I think when we started during our Testing the Waters roadshow, Laura, you may remember this, but we had a long-term target, and we are basically almost there. So I think our target was roughly around $100 of revenue, ARPU, back then. And then what we said was that our goal was to achieve 30% gross margins, which would then drive about 15% EBITDA margins. I'd like to say we're almost there. We are now somewhere in that north of 20 or roughly around 20% gross margin. This is a story that is just unfolding right now. We need about 10 points to deliver on that 30% gross margin, and it's not much to believe. You're talking about 300 basis points of programming efficiencies, 200 to 300 basis points of advertising uplift, 100 or 200 basis points in G&A and technology, and then as you see, our efficiencies on the sales and marketing side have also been pretty impressive. So, my view is that we're almost there, and this transaction will allow us to amplify all of the innovation and success and execution that we put into this company. So I'm very excited about this. Our investors should be very excited about this, and I'm hoping Disney is excited about this as we are.
Your next question comes from a line of Sebastiano Petti from JP Morgan. Your line is open.
Hi, thank you for taking the question, and congratulations on the deal. Just maybe if you could kind of help us think about, now with the added scale that you have from the live TV combination with Hulu, I mean, how are you thinking about rest of world? Is that still core to you over time? And if so, why? And as we're thinking about perhaps rest of world, I mean, are there synergies or maybe cross-bundling opportunities when you look at Disney's international streaming services? And then following up on that, I guess maybe quick one. Any benefit from the YouTube TV blackout of Disney from over the weekend? Thanks.
Yeah, thank you. This is David. Look, I'm very bullish on rest of the world. I have been. It's all about a timing question. Right now, as I just said, we are very focused on migrating Molotov onto the FuboTV platform. We'll look to partner with Disney internationally. I think this is going to create a tremendous amount of value for both companies. Disney Plus, will benefit from all the local programming that we're going to provide. Markets like France, there are probably 3 or 4 markets we'd like to start with in the next 18 to 24 months, and then quickly move in to other markets because the platform has been built so efficiently. It is obviously core. I don't know why there's always a question around rest of world. I mean, you tell me. I think, Reed Hastings used to talk about the fact that he wanted to be like YouTube because 80% of YouTube's revenue came from outside of the United States. We are no different. We think that we can be a global leader in the live TV streaming space. There are hundreds and hundreds of millions of people that still value live sports, live news, and we're going to focus on developing that strategy in the short term. And I think everyone on both sides is very excited about that. As it relates to YouTube TV and their I guess, there are issues with Disney. That's not anything we can really talk about. What I can say is that just like last year, we see bumps all the time from people that are looking for programming, so there's not really much to say about that. The interesting thing is that while we have seen an influx of YouTube TV customers, we're seeing all around improvements, as I just mentioned, including in Latino, in terms of subscriber growth. So, we haven't really marketed that. We're not attempting to take advantage of that. We'll let that play out as it will, and, we're focused on our own business here.
Thank you.
Your next question comes from a line of Clark Lampen from BTIG. Your line is open.
Thanks very much. John, maybe in light of the comments around LATAM customer strength to start 4Q, could we dial it back a little bit and maybe talk about early October reads across the entire spectrum? And then if we were to sort of focus a little bit more medium to long term, fill rates, programming efficiencies. David, I think you said that you haven't had fair deals thus far. Maybe update us on revenue and expense synergies, I guess, on a go-forward basis, and how that might impact profit trajectory. At what point could we start to see sustainable sort of EBITDA and net earnings profitability? Thanks a lot.
Clark, on the first part of that question, was that specific to advertising or was that more broad?
I correct me if I'm wrong, I guess, but the comment, it sounded like it was on a subscriber basis. So is it, if we were thinking about the subscriber trajectory of the business for 4Q, are you seeing the same strength with sort of core demos relative to LATAM, or was there some bifurcation for one reason or another?
No, actually, so thanks for the question. Yeah, so I'd say the strength we saw through the third quarter, meaning August, September, has continued through October. And what I would say is that relative to plan, we're exceeding, I would say, on across all packaging. And so not just Latino, but also on Canada, Skinny Bundle, standalone RSNs, and English.
Yeah, I would just add that, look, the reason why we're continuing to formulate these different services and packages is because we want to reduce the cost of entry and at the same time create attractive user economics. And you're starting to see that unfold this quarter. And as I mentioned, Latino is really just a little seed, is that, we're seeing this across the board. So typically our strongest quarters, as you guys know, is the back half of the year, third and fourth quarter, given the strength of the sports calendar. So we're, again, very excited about this. We're excited about our new relationship with Disney. I have to say the first few days have been extremely exciting. Everybody seems to be on the same page. We all know what we want, and it's going to be FuboTV's job to execute and drive shareholder value.
And then maybe on synergies. Look, when we announced the business combination in January, we highlighted content, expense, and advertising as really the key areas of synergies. David commented before about the ads team. They're already working with Disney in their offices as of this morning, so we are moving with urgency. So on the timing of that advertising synergy, I would say we'll see that in the short to midterm. On the content expense savings, remain very confident there as well. I think the opportunity is meaningful. And you're right, but it's not just fill rate for advertising. It's other factors as well. We think there's also CPM upside, to name a couple.
And that was our final question. This concludes today's conference call. We thank you for your participation, and you may now disconnect.
All right, that was a pretty quick call. I'll share some of my thoughts with you guys. I think it was a great call. I'm wondering why the stock's not over $4. That's the one thing I'm worried about. No, I'm kidding. I'm not worried at all. The stock will perform as we see the company continue to grow and expand. I like the comments he made on the rest of the world segment, which I think is one of the main things we're going to see in the future, continuing to grow, especially as they've stabilized this North American market currently. And I think the third quarter results really are marking I have some notes. I'll just go over them, and if you guys have any questions or anything, drop them in the comments or the chat. I'll read them right now if anyone has any comments in the chat. But I think the third quarter 2025 results are marking a pivotal moment for the sports first streaming platform. Because there was, as we've known, if you've been in the stock for a while or if you've been in the market for a while, there's been a lot of skepticism from investors who have doubted whether the company could ever achieve sustainable profitability. However, FuboTV has delivered evidence that its business model is beginning to work at scale, which is one of the main things that I think a lot of people were doubting on the company. The company is focusing on disciplining its cost management, operational efficiency, and high value subscribers, which is transforming it into one of the biggest turnaround stories I think on the market and in the streaming sector in general. As we could see here, it reported 377 million in total revenue, which is virtually flat with last year, but above Wall Street expectations, which is one of the main things I want to point out to you guys. And I think it's very important that they've beat expectations and that the stock really should be higher right now. But from an outside view, it just seems modest because we're still in a period where many media platforms are experiencing subscriber fatigue, and there's a lot of advertising headwinds. There's stability itself is a sign of strength in my opinion. So I think that this being able to stay consistent and be able to still grow their subscriber numbers is very important. And the North American revenue coming in at 386 million, while international operations added this other little part of the revenue is very crucial to look at. And it seems that they've gotten it down pat what they're doing in the North American region. So if they can expand this worldwide, we could see the stock truly double, triple, quadruple, even 10x. I don't like to say the 10x, but it could even 10x within a couple years, especially as they continue to grow. So one of the main things I want to point out is the subscriber growth here. As we could see, 1.63 million paid North American subscribers, which is a new all-time high, and it's up 1% year over year. In a hyper-competitive live TV streaming market, that growth is modest, and I think it demonstrates staying power and that they're continuing to be a footprint inside this business model, and that there's a lot of competition, of course, but they're one of the main ones up there, and they have gotten it down pat what they're doing. Equally important is that FuboTV is no longer chasing unprofitable subscriber additions, because I know they used to run promotions and stuff to get subscribers, but I think now management has shifted its focus towards improving the average revenue per user, which I think is it's going to be a crucial turning point for the company, because high value customers who engage with premium sports and entertainment bundles are now driving this healthier mix of revenue that we're seeing, and this strategic pivot mirrors the evolution of larger streaming names I've seen in the market, like Netflix, Disney Plus, who have both proven that profitability depends less on raw subscriber count and more on how you can monetize your customers, which is why I enjoy the AI-driven advertising that they're doing, and the sports betting. I think it's going to be the main thing that drives this stock much higher next year, especially as they have all this operational stuff down pat. This is going to be the next big coming for for the stock, and for its first time in history. Where is it? I gotta find it now. Oh, I accidentally closed it. No, I just zoomed out. EBIT. Oh, sorry. The EBITDA. The EBITDA is absolutely massive. And it's something that I think you need to be keeping an eye on. And it finally turned positive after all these years of losses and everything. This $34 million improvement is from the same quarter last year. The company also achieved positive, where was it? They achieved positive adjusted earnings per share of 2 cents, which is compared to a loss of 8 cents in 2024. Even under generally accepted accounting principles, the GAAP net loss shrunk by nearly 70% year over year, and these numbers mark a significant milestone, in my opinion. All these numbers I've looked at today, everything I've seen today, it's proving that FuboTV can generate operational profits without sacrificing user experience or their product quality. They still have a top of the line product. They still have a great experience on the app. Everyone I've seen use Fubo says they have enjoyed it. And I think they've done this while also aggressively cost optimizing the company. And they've trimmed content speed, renegotiated different fees they've had, and scaled back on the inefficient marketing, which is clearly paying off. I think the marketing that they previously were doing was some of the worst stuff I've seen, and it just felt too, like, I don't know how to explain it. It was very generic, the advertising. So I like that they've pulled back, and now their advertising team has gone to Disney, and that they will just be working jointly. I think this will improve the value of the stock, and it will cause the stock to grow inside the future. Their Fubo's future growth strategy centers on three key initiatives, in my opinion. It's the enhanced advertising technology, because I think everyone is focusing on how AI can really help out the company. And a lot of companies are going to be turning towards this in the future to see AI in some respect, and it causes the stock to go up. As we can see now, it's about to hit 4. I think by market open, we open up at $4 a share, but that's besides the point. I want to talk about how this enhanced advertising technology will allow targeted ads, which are worth more for companies, because into this not only this targeting allows more relevant ad placements and higher revenue per viewer. Early tests of the Fast, which is their free ad supported television channels, are boosting engagement, while the planned rollout of sports betting also, where permitted, could add a new high margin revenue stream. This is one of the main things. Sports wagering, I think, is gonna it's something that obviously it's a little degenerate, but it's definitely gonna stay, and I think it's gonna continue to grow in America, especially as we see. I know some of my friends personally, even they will not watch sports unless they're able to gamble on sports. This mixes with their premium tier content, where by having these premium tiers of content, they are building on Fubo's brand identity as the destination for live sports fans. The platform already differentiates itself through features like multi-view streaming, real-time stats overlays, and personalized recommendations, which are elements that competitors struggle to replicate at scale. And I think they have it down pat, and I think the system that they are running on is very good. Also, I want to point out their cash. Where is it? I see everything gets lost once you start talking. I have all these notes written down, and then you start talking, and then everything goes out the window, kind of. But for the cash, I think the balance sheet is one of their main sources of optimism. If you're an investor in this company and you're looking at this balance sheet, I think you should be very proud and happy to be invested. They closed the quarter with $274 million in cash and cash equivalents, which is providing them ample runway to fund their ongoing innovation and potential content partnerships that we could see in the future. This liquidity gives the company a lot of breathing room to continue improving their margins without resorting to dilution or borrowing at absorbent interest rates, we've been seeing in the current health of the ecosystem. But moreover, management reaffirmed its goal of achieving positive free cash flow within the next few quarters, which is supported by improving gross margins and disciplined capital expenditure. For a company that was criticized for its cash burn over the years, that was one of the main criticisms I've seen. This represents a real structural turning point, and I think after like all these years we've seen a volatility, this third quarter 2025 performance signals a business transitioning from survival mode into strategic execution. The company has proven that it can maintain revenue, grow subscribers at a modest rate, of course, but it's going to continue to grow in the future, and most importantly, operate profitably on an adjusted basis. With their steady average revenue per user improvement, cost discipline, and a strong cash position, the path towards consistent free cash flow generation now looks very attainable. And if not even attainable, I would say it's very much so on the front door. We're like trick-or-treaters. We're at the front door. I look like a pumpkin, kind of. So we're at the front door. We're knocking on the front door, and we're about to walk right in, because I think this stock is really about to get readjusted way heavier because Wall Street often underestimates how quickly sentiment can shift once a small cap company like this and it demonstrates profitability. I think the stock will go through the roof. And if Fubo can replicate these results in Q4, particularly during a high engagement NFL and NBA season, the market may re-rate the stock from a speculative stock to a legitimate player in the digital TV ecosystem. So that's kind of my main thoughts, and I think that's why I think the stock will grow in the next couple quarters, and why I think this is personally I would be buying. I have a couple thousand shares, but I think this third quarter results tell a clear story in my opinion. A once unprofitable disruptor is transforming into a financially disciplined growth company. There's revenue stability, rising average revenue per user, a smaller net loss, and positive adjusted EBITDA all point towards a leaner, more mature operation and a company that is running at high margins. So while risks remain, there's obviously going to be competitive pressure. There's a lot of people that realize the value of this type of market. Not only this, there's content costs and macroeconomic uncertainty, but I think the core trajectory is unmistakably upward. And that is the main thing you want to look for when you're investing in a stock such as this. With improving fundamentals and expanding strategic options, Fubo is kind of, excuse me, Fubo stands out as one of the few streaming platforms that could achieve what once seemed impossible. And it is sustainable profitability in live TV streaming. It is just something that people have since I know about the stock, since everyone's talked about the stock, that was the main thing. There's no way to make it profitable. There's too much expenses. There's too much this. The cost per acquisition of customers is too high. And Fubo's pretty much doing it. We're almost at that turning point, I think, and it's pretty much there. As I think one of the main things to watch for in the 2026, the next couple earnings reports, is how this advertising component has paid off for the company, as well as how the sports betting, how this can get implemented into the company quicker. And if we could get this sooner than later, I think that will be a big turning point in it. Think about if you have a million transactions a day. So there's a million customers, active users, active customers. And let's say each one places one bet a month. You have a million customers. You take a transaction fee out of that, you're already making a large amount on that. And then they're still watching the platform. They're taking advertising money. They're paying for the subscription. I think it's very foolproof plan. And I think it's one of the main reasons I see Fubo growing in the next couple quarters exponentially, really, especially at this price point. It's very cheap compared to the potential for the company to grow. And I was saying that the stock's going to open at 4. I think it's going to be very close. It's 9:18 where I am right now. And so the market will open in about 12 minutes. I think it hit $4 at one point, but then it dropped right under. I think it will hold $4 today. I think it will get to 4. And I think this is not a bad place to park your money for the near future, the long future. And if you believe in the future of live streaming, the future of sports, all this stuff, I think it's a no-brainer really to be investing in this company. And I think it's something to keep an eye on, of course, but I think it's a good investment to be making at this point. Let me check the comments here real quick. RX. Of course, I love RX. I made a video on it. I think it's one of the best healthcare. It's not even healthcare. I would even consider it healthcare. It's more just like AI innovation and biopharmaceuticals. But let's go Fubo. I agree. If anyone has any questions or anything, if you want to drop them in the comments, or if not, I'll probably head off here in a second, just because I'm not sure how much more I can talk about. I already kind of went through all my notes. I've talked about what I kind of see here. I see a very great company at a turning point in its history, and I think if you're investing here, you're in a good place to be. And obviously, I appreciate anyone who hung out today, anyone who watched the earnings call with me. I hope you guys have a great Monday. because it's Monday. I know I'm not too excited for the week. It's a Monday. I got a couple exams this week and stuff. I hope you guys don't have too much of a stressful week. And but yeah, the stock is at 395 currently, and I think, as I was saying, I think it will open at 4. There's a lot of pressure. There's good support at the 390 mark. I was looking at the options flow on an app called Mumu, which I get like, it only costed me like I think $5 a month to get level 2 options readings, and so I see there's lots of support at the 390 mark, and then there's obviously the wall at 4, but once it breaks that wall, I think it will just be upward pressure. So we could see the stock even go up 10, 15, 20% today. Anything's really possible at this point. And I'd love to hear your guys' thoughts inside the chat or the comments. I'll give it a couple minutes here. I'll just kind of look at everything else. I do like their website, honestly. I was going to say that earlier. They have one of the best interfaces for like at least online websites. And I personally enjoy like the dark. I think it's better for your eyes, and it like draws your attention towards the stuff that is actually inside of the white text, in my opinion. I do like their website a lot. So yeah, if anyone has any thoughts or questions, I'll answer them right now. If not, I'll probably be heading out here in just a couple seconds. I'd love to hear your guys' thoughts though, if anyone has anything. Or if they want to criticize any of my thoughts, I'm always open to hear anything. Because I'm definitely no genius on this stock stuff. I just like stocks, you know. It is what it is. Obviously, I wish they put more emphasis on the guidances and in their expectations. But either way, I think it was a strong call. The guidance. I wish they pointed to next year more. What they were planning to do. They kind of mentioned the ad, like integrating the ad AI ad driven technology, but I want to hear more about sports betting. I know that sounds like I'm probably like the perfect demographic for the sports betting, but I think that's going to be their main driver of growth. And we've seen it with every company, FanDuel. I mean, there's so much competition now in sports betting, but imagine you're watching a sport and like you already have your bank linked obviously to the account on FuboTV if you're subscribing to it. And then let's say you want to bet on the game and there's like a pop-up option and it's like, oh, this score, and you could just I think it's a perfect win for this company. I think it's one of the most beautiful things that will happen once that is fully implemented for the company, because sports betting is only going to continue to grow. I think this stock has a lot of potential here, and I think it's at 391 right now. I think it will continue to grow in the day. I want to see it close at around 415, 420. That is where I see my projection at. I think all the recent news has been very bullish. I think it's a great stock to be investing in. And yeah, that's kind of my general thoughts here. Even if I didn't have any position, I'd say like it's just a good growing company, and it's kind of remains sustainability, and like it remained flat in a time where companies are dropping, because it's hard to stay in a business like this, especially with how much how competitive it really is. I mean, there's thousands and thousands of investors, people trying to get in on this market, and I think FuboTV is doing it. Some of the best work is getting done by FuboTV. And I think that is going to continue to show inside their next earnings, and it's something I'm going to watch for and be excited to keep an eye on. But yeah, that's pretty much it. The market's going to open in 5 minutes, so I'm probably going to head off and go watch that a little bit and then go eat breakfast. But I hope you guys have a great rest of your day. If you guys have any comments, you could leave it on I'll upload this as a video after I'm done, so you can leave a comment down below, any thoughts you have or anything. I appreciate you guys hanging out with me this morning on your Monday morning. I hope you guys got any information. I don't know. I think it's not a bad thing. I mean, hey. All right, guys. Have a great rest of your day. I'll see you guys later. Make sure you guys be safe, be happy, be healthy. Treat everyone with respect, treat everyone nicely, and have a great rest of your day. Peace.